Okay, cool. So we're gonna do a fixed asset acquisition, and then we're gonna do probably just a depreciation journal. Yeah, okay, so let's get into it. The creation of fixed assets in AX is pretty overly taxing. It's a multi-part process. So I'll show it to you. So first of all, we go to fixed assets. We go into common, fixed assets over here. So now let's say, I don't know, let's say we got a car for I don't know, let's say we bought a Tesla for 80,000, right? So we're gonna go new, fixed asset. We're gonna choose the group. Okay, so we want motor vehicle. We're gonna give it a number, right? So let's call it Tesla 01. Sorry, 01. We're gonna say this is the Tesla Model S. There we go. And we're gonna say the unit cost. So I don't know, I think they're actually more than 80, but let's put 80,000. So there we go. Cool. We don't really care about most of this, right? Technical information, insurance, location. Yeah, it's not really essential. Maybe in the future, but for now we don't care. Okay, so now actually you could save it, but it wouldn't actually allow you to do anything further. So you got to make sure you give it a value model, right? So you come in here and you do your value model, you hit it up. Now you decide, right? Is it a home term and hardware? Is it for one of the guys here, it's Tesla? Is it for one of the company stores? You only use these no depreciation if it's land. Is it for MITA 10? So we're going to say it's for home term and hardware. We're going to say when was the depreciation run date. We're going to say we acquired this on the 3rd of October. Cool. Okay, so now what we're going to do, acquisition price was 80,000. Happy with that. Okay, everything looks good. Acquisition date, we want to make sure we fill this in correctly. So let's do the acquisition date as well as the 3rd of October. Depreciation. Okay, so depreciation run date, we want it to be the 3rd of October. And we want to say service life now. So now this is where it comes down to your determination. So I think within HTH it's 5 years. So 5 times 12 is 60, right? So if we throw in, sorry, that's the year. So put in depreciation periods rather is 60. Now the reason why I say put in the depreciation periods, not the service life, is due to the purchase of MITA 10 in fiscal year 2017. They split up in AX the financial calendar into 2 years. So there were 6 periods in 1 year and 6 periods in the other year. So if you put in a service life in anywhere between I guess the end of June 2017, before that, it will calculate the incorrect depreciation periods. So rather just put in the depreciation periods and you avoid all of that drama. Okay, so we're good to go. We can close that one. Okay, so we're happy with that value model, but we also want to do a tax model, right? So let's say, for example, the taxman said, hang on, you know, like you guys don't get to write off a Tesla over 5 years because you know, you get government subsidies for solar panel and all sorts of things, so you have to write it off over, let's call it 6 years, right? So we need to add a separate tax value model. So that's what we've done. We then go in here, we then make sure that our acquisition date is the same. So again, you can, if the taxman wants a different acquisition date, can do all of that. Put in, well, not 80, so 80,000, cool. Depreciation, and yeah, we're gonna put in 72 because it depreciates over 6 years. And there you go. And now you can see you can run depreciation for tax, and you can run depreciation for your normal books. So that asset you'd think would be complete. Alas, that's not the case. So what we got to do now is go back to our fixed assets, journal, fixed assets, open this guy, and we want to, let's just delete this one for posterity. So we're going to add a new one here. We're going to add a fixed asset acquisition journal. Okay, you're going to add the financial dimensions you want if it's a single asset. If it's multiple assets, then you're going to have to want to add those financial dimensions manually, right? So we're going to go lines, And now we're going to do proposal. So we're going to do an acquisition proposal. Okay, we're going to say all of the assets that aren't acquired. I'm going to click OK. Okay, so ignore that one. That's one I added a while ago. We just want the Tesla, right? So you can see it picked up the value. Okay, we can put in a description here: acquiring awesome Tesla. Then what we're going to do is we want to say an offset account, right? So depending on how you're acquiring these assets, this could go to your bank account. You know, are you crediting your bank account? Are you crediting creditors control? You know, do you owe someone this money? Ultimately, that's up to you guys as the accountants. So you put in something. So let's say we're doing really well and we acquired it from petty cash, and then we'll throw in the wonderful financial dimensions. Okay, so no match found, so that's grand, and obviously that won't approve. So let's throw this into 999 maybe. The financial dimensions there. Super frustrating. Yeah. Okay, so let's just choose something that I know will have values. Whatever. Okay, cool. So now what we want to do is just make sure that the financial dimensions on the account are also set up. Because see, I didn't set them up before, right? So we're just going to choose the same ones just to get the journal posted, right? So you can see like so let's just, I'll show you. So basically, if you haven't done this journal and you go in, you'll see the fixed assets not acquired. So there you go, it'll be there, it's not acquired. Even though you know you filled out all the details, it doesn't actually reflect well, there you go, there it is there, but it doesn't reflect as acquired just quite yet, and that's why we have to do these journals. So we're cool, we're going to validate that journal. Okay, journal's okay, happy days, and we're going to post it. Cool, journal posted. Now if we go not acquired, we shouldn't see the Tesla. So we see the tax one, but I don't care about that, right? I mean, fixed assets acquired, there's the Tesla. Okay, so happy days. That Tesla's acquired. Now what we can do is we can run depreciation for it. So to run depreciation, we go to fixed assets, periodic, and we go create fixed assets proposals. Okay, we're going to look at the layer. So now if you wanted to run depreciation, so for the tax, you'd actually have to acquire that asset for the tax too if you wanted to run a separate tax journal. So the posting layer, you've got current operations tax. I'm just going to run it for current. Okay, I'm going to choose a journal, so let's call it fixed asset depreciation journal. I'm going to hit the proposal and I'm going to do a depreciation proposal. Click that. So what date? I'm going to go, yeah, might as well do it today. Yeah, cool. There we go, so it's done something. We can go look into journals, and there's our depreciation journal. If we go to lines, boom, there's the Tesla depreciation. Okay, happy days. So that's kind of acquiring an asset, depreciating an asset. I only did it for the current layer. If you want to do it for the tax layer, you're going to have to acquire that asset on the tax layer, and you're going to have to run depreciation for the tax layer. Yeah, so that's that. So next lesson, I will be doing a disposal of fixed assets. So yeah, chat then.